Good morning, traders. This is your game plan for Thursday, April 17th. We're going to start with the longer-term chart of the market. You can see all of these lines here. The black line is the 200-day moving average. The purple line is the 50-day moving average. That is a death cross. That is bearish. Point number 2, we've got this horizontal resistance level at SPY 550. That also coincides with this downward sloping trend line. This is a resistance level. We wanted to see the market struggle to get back to that resistance level. That's what we're currently seeing. You can see in this blue dotted line that resistance is forming before we even get to that horizontal resistance level. That is a sign of selling pressure. Number 3, the green line is a VWAP-Q that starts at triple witching. You can see how the market is below that point as well. All told, this is bearish. This long green candle right here, I view that as a potential solo. We would be much more concerned with 4 candles that cover that same area stacked consecutively, because that would be a sign of persistent buying. When you only get one candle, it could be generated by trading programs, which this was largely mechanical, and you can see how the market is continuing to back off. Overnight price action. You can see yesterday we had pretty stiff selling on heavy volume. This is really what I'm looking at. Overnight, the market did gap a little higher on TSM earnings, and you can see how the market has retraced the entire evening session. What can we expect today? I would be looking for a wimpy first move ahead of a major holiday. This is likely to be a low probability trading session. What does a wimpy move look like? Well, if your first move down is featuring mixed overlapping candles like this, then you wait for that support to form, and then your first decent trade of the day is going to be to fade that wimpy first move. And buyers and sellers are paired off, and that's why you're seeing that wimpy first move. So they try to get the market moving one way, and when it stalls out, the move that is, then you're going to get a nice little reversal intraday, and that's going to give you a good opportunity to take the other side. Same would be true for a wimpy rally. So let's say the first move of the day is wimpy like this. Mixed overlapping candles, wicks and tails, nothing really going on, and they get this nice long green candle here, and then you get this stacked red candle reaction. That is a fabricated move, just like I showed you on the daily chart. It's just short covering at the high of the day. Those are buy stops that were triggered. As soon as that move takes place, sellers play whack-a-mole. And then the rest of the day, you can see heavy selling pressure. I would be favoring the short side today, so I'm hoping that the first move of the day is this wimpy bounce, this wimpy grind higher. I will be looking for shorts out of the gate if I see that formation, and I'm going to be focusing on that resistance. When it starts to form, I'm going to be shorting stocks like Starbucks. I showed you that one in the live event yesterday. That was right about in here. That stock sold off hard yesterday afternoon. That was a really nice pick. I'm going to be doing a video on Sunday. Happy Easter, everyone. Low probability trading. Try and fade a wimpy first move, and that probably will be your best setup today. We will see you Sunday. Thank you.